Hey everybody, RJ Baxter here with Fairway Independent Mortgage with your weekly market update. So we've had an interesting week this week, to say the least, a volatile week. We saw a day on Tuesday where the markets dropped sharply, and we've had a ton of volatility all week. The markets were closed on Wednesday for the unfortunate passing of former President George Bush, so most of the markets weren't even open that day. And the days that they were open, there's been some wild fluctuations. So what's happening? Well, one thing that's happening is there's been a lot of talk this week about what's called the inverted yield curve. And what this is, I want to talk about this on the video today, because the inverted yield curve concept throughout history has been an indicator of a recession to come within 12 to 18 months. This is an important thing that people are looking at. And what happened specifically on Tuesday is we saw the yields on the 10-year Treasury bill improve, or decrease rather, significantly. So what does that mean? So the 10-year T-bill or Treasury note is a fixed asset investment that we watch as a general correlation to mortgage rates. So it's not directly correlated to what mortgage rates do, but generally speaking, if the yields on the 10-year Treasury note go down, we see an improvement in rates. And we saw that this week. Rates got a little bit better this week. But at the same time, the yields on shorter-term investments, shorter-term fixed-rate investments, like the 2-year note, for example, stayed stable. So in other words, the difference between what someone could get on investing their money for a longer-term fixed asset investment got less, and at the same time, the yield on a shorter-term investment stayed about the same. So that spread, or that difference between a longer-term versus a shorter-term investment narrowed. And what I'm talking about with an inverted yield curve is when an investor can actually get a better return for investing their money short-term than they can for long-term, which doesn't make any sense. Obviously, it seems like banks would pay a better yield if they could tie up your money for a longer period of time. They'd give you a better return on that investment. So when we see the curve or the yields invert, so in other words, getting a better return on a shorter term in fixed rate investment, that is an indicator, or it has been throughout history, that a recession is likely to follow in the next 12 to 18 months. So very, very interesting, because this spread has gotten very narrow recently. And the reason why I wanted to talk about this today on the market update is that we have a Federal Reserve meeting coming up here in a week and a half. December 18th and 19th, I think, are the dates. I'm not looking at it right now. But it's likely that the Fed is going to raise rates on that meeting. They've telegraphed that. It's expected that they're going to raise rates likely by 0.25%. Now the yield between the 2-year and the 10-year now is less than 0.25%. It's been hovering between 0.1%, or 10 basis points and 25 basis points. And if the Fed raises rates by 0.25%, what they're raising short-term rates. So if the Fed raises short-term rates as expected in a week and a half now, it's likely that the yield on the 2-year and the 10-year could invert at that time. So I wanted to be sure to bring that up, because that could be something that affects the markets here over the short term, over the next 3 weeks, and then going into next year. So very, very interesting times we're in right now. Bottom line is rates have improved. If you're thinking about doing something as far as consolidating debt on a cash out refinance, or you're thinking about buying a house, it's a good time to take a look at what your payment might look like. So that's where we come in. Just give us a call in the office. We'd be happy to run some numbers for you or answer any questions that you have. Once again, my name is RJ Baxter, Fairway Independent Mortgage. You guys have a great rest of your day and a safe and fun weekend.